Yes, people, a very happy morning to all of you. So, guys, we are starting a brand new topic today, which is account current. And this unit, guys, forms a part of your chapter 6, which is accounting for special transaction. So, guys, before we understand what is account current and why do we prepare account current, let's have a look at from the examination perspective from this particular chapter, how many times the questions has been asked in the past examination since 2018 and what marks does it carry. So if you see here, guys, from May 2018 onwards, pretty much every examination there is some question or the other from this topic. So if you see May 2018 question 2 part C, we had a question from this particular chapter, and the method or the type of the question was forward method, which is a product category, product method. What is forward method? What is product method? All that we'll see today. Guys, this was not an independent question. This came as a OR question with another chapter by name sale of goods on return or approval basis. In short, we call it a SOGRA. Why it is SOGRA? I'll explain you when it is been taken, probably next week. So there'll be one particular question, guys, 5-mark question, where there you'll have a OR choice. So here the question that was asked in May 2018, question 2C, was an OR question between the account current topic and the SOGRA topic. Out of these two, you have to write any one question. So that was for 5 marks. And in the very same examination, they asked one true or false question for 2 marks from this chapter. November 18, guys, question 2C, there was one independent question under forward method, product method, which is for 5 marks. May 2019, no 5-mark question, but they asked a true and false for a 2-mark thing. November 19, again, question 3C, they asked the product of balances in case of bank. So this is again a different variety of question under this chapter. And this was also an OR question with average due date question. So which means here they gave 2 questions. You had to choose between account current and average due date and write any one. So this was also for 5 marks. December 20 attempt also question 3B. They've asked it as an OR question. So this was an account current question versus average due date question. You had to pick any one and write for 5 marks. Jan 21, we got 2 questions. One 5-mark question, another is 2-mark question as true and false. July 21 attempt, unluckily, no question from this segment. Why unluckily? Because such an easy chapter. If question comes from this segment, 5 marks is halwa for us. December 21, question 3C, again a question for 5 marks. So this was an OR question with partnership. This was an OR question with partnership. I think if I'm not wrong, even in June 22 also, guys, this was an OR question with again a partnership. So in one examination, they had asked the past adjustment question, 11 CBSE topic. And in one more year, they asked how to calculate the goodwill under some method. So they asked an OR question for partnership. So this also was for 5 marks. This cannot be 2 marks. This is for 5 marks. In December 22 examination, the latest examination which is gone by, again a question was asked from this topic, which was an OR question with average due date. So under forward and product method. So this was also for 5 marks. So guys, every examination, every attempt, we had a question from this topic. So examination point of view, very, very important. We cannot skip out anything. So now guys, let's head towards understanding what is account current. Why do we prepare account current? So for that reason, let me take an example. This is Mr. X. Mr. Y. This fellow is wholesaler. Mr. Y is retailer. Why this line is going to like this? Mr. X has sold goods to Mr. Y. Mr. X has sold goods to Mr. Y on credit basis, which means X is the seller, Y is the buyer, Y is the customer. It does not stop here. So X has something which is selling to Y, which means Y is buying something from X. Y has got something which X is also liking, which means X is also buying something from Y. So X is selling goods to Y. Y is in return selling some other goods to X. Now, purchased goods on credit. So here X is selling something to Y. X is selling something to Y, some product. And X is buying some other product from Y. So between X and Y, there is a purchase and sale transaction happening back and forth. So normally, guys, these kind of transactions when we record, what is the journal entry to be passed? So I have to, guys, say we are doing accounting. We are doing accounting for Mr. X. We are the accountant of chart accounts of Mr. X. So in the books of X, I have to write the journal entry. In the books of X. Okay. What will be the journal entry for sale? What will be the journal entry for sale? For me, for X, Y is a customer, debtor. So debtor account debit to sales. So here Y account debit to sales. Online, correct?
Yes, sir.
So every time a sale takes place on credit basis, this would be the journal entry. Am I right or wrong? Hello? Okay. Similarly, if X is buying from Y, what will happen? It's a purchase. So what is the journal entry for purchase?
Purchases to Y.
Very good. Purchases account debit to Y. Which means every time X does the purchase from Y, this is the journal entry he'll follow while recording for a credit purchase journal entry. Now what happens? We have to open a ledger. So what ledger will you open? Y's account. In the books of X, which account will be open? Y's account. Debit, credit. So we have to record sale. So can I say it will be two sale? Some date. Let's suppose this is 1st of March. Two sales, 1000 rupees. Am I right? Let's say 2nd of March. Again, we are selling to X. So two sales, 2000 rupees. We are buying from Y. We are buying from Y. What will be the posting? 3rd March. Buy, purchase, 500 rupees. On 4th of March, again we are buying. On 4th of March, again we are buying. So it is buy, purchase, 1500. Okay. We have no problem with this, guys. The problem comes when you grant a credit period. You grant a credit period. On that credit period, the money is not paid. On the due date, you agreed a credit period. You arrived at the due date. On the due date, money is not paid. For example, here let's talk about 1-3, guys. 1-3, we have done a sale. This is a sale, credit sale. The credit period agreed is 1 month. The credit period agreed is 1 month. This is credit sale. The credit period agreed is 1 month. So what will be the due date? What will be the due date for payment online, people? Credit period is 1 month.
1st April.
So 1/4, correct? No, 1 month. So 1 March you have sold the goods. Credit period is 1 month. So can I say here this is the date of receipt of money? So we have to receive money from Y on 1/4, whatever the amount is. Now tell me, people, we have done average due date topic. What did we learn? There are two options, rather three options. Y can make the payment on the due date. First option is Y can make the payment on due date. If the payment is made on due date, if money is received by us on due date, no problem. What if the money is not received on due date? What if the money is received later? Somewhere here. Which is, let's suppose, 1/5. 1/5 is the date of actual receipt. You were supposed to receive the money here, but you did not receive money after 1 month. You received money after 2 months. So please tell me, can I say to the extent of this, there is a delay in payment by another 1 month? Guys, originally what is agreed? Originally they said that this is the sale date. This is the agreed due date. Here they have given a time gap of 1 month. Here there is a time gap of 1 month given. So this 1 month, please tell me, is a benefit given to whom? It is a benefit that is given to the buyer. He is getting a benefit of paying goods 1 month later. He is getting a benefit of paying the price of goods 1 month later. So this is an agreed benefit. Can I say that? When I made the sale here, this benefit of 1 month to Y is been agreed. Okay. Now, guys, that fellow is not making the payment on the agreed date. Instead, is making the payment 1 month delay. So for this 1 month delay, will you charge him any interest, or do you think on 1/5 you will correct the actual sale value and leave it? Will charge interest. We have learned also in the average due date concept that whenever a person makes the delay in payment, we have to penalize him. We have to discourage him that he does not repeat such activity in the future. If you don't charge him money now, every single time you agree a credit period, he will not make the payment on the due date. He will keep on postponing it. Why? Because he knows if he is making a delayed payment, we are not fighting with him. We are not penalizing him. We are not charging him any additional amount. So he will take advantage of that, and he will try to delay the payment every time. So to bring him under control, what we do is we charge interest. This is one way of understanding or justifying why interest is charged. But technically, a businessman, why does he charge interest? Why? Because now let's suppose X would have received this money on 1/4. What you'd have done, he wouldn't have kept that money idle. The money of this sale value, which is 1,000 rupees, had he received this money on the due date, which is 1/4, he would not have kept that money idle. He would have invested that money in his business. He would have purchased some goods. He would have sold that goods. And during this period, he would have made some additional income. Yes or no? Hello? Now, just because this fellows delayed the payment till here, can I say Mr. X has lost the opportunity of earning that extra income? That extra income, what he was earlier planning, that extra income is now missing it out. So he want to recover that income from whom? Mr. Y. So that is why he's charging interest. So this is the second reason or second justification what I'm giving, that why X is charging interest and why Y should pay the interest. Are you able to follow? The question that arises in our mind is that, sir, why interest? If he's delaying the payment, obviously he's having a cash crunch. He's in genuine difficulty. That's why he's making the delay in payment. Agreed. But whether it is a genuine reason or a non-genuine reason, as a seller, how will I know? You asked me initial 1 month credit. Who asked this credit period 1 month? X gave the credit period because Y asked it now. So both of them have contracted for this. So when you deviate from a contract, it is a violation of a contract. Therefore, the interest clause will come into picture. So I give you two reasons, two justifications why the interest has to be coming into picture. One is, if you don't charge interest, this will continue. This habit will continue. So every time in future you ask the payment, he will delay. So to discourage him, we penalize. This is one justification. Second is, had X got the money here, he would have invested that money in the business and made some more money out of it. So that opportunity also he lost. So that opportunity what he lost, he will try to recover now from whom? Mr. Y. So that is why he's charging interest. So can I say here, interest is charged for late payment. Am I right? Online people, hello. Interest is charged. Charge means we'll take it from Y. So for Y it is a expense. For us it is a income. Any problem in this understanding, online people? Hello.
No, sir.
No,
Everybody.
No, sir.
No.
Okay. Now, in the same way, guys. So one option I told you that you are making the payment on the due date. Second option, you said that, sir, what if the late payment is happening? So late payment is another option. One more option, can I say? Third option is early payment. Early payment means, let's take an example of 15th March, date of actual receipt, which means you gave the initial credit period. How much is the initial credit period? 1 month. But this fellow has paid us within 15 days. He's taking 15 days earlier payment. When the original contract was made for 1 month, the benefit that we agreed for Mr. Y is how many months? 1 month. Can you deviate from that benefit? Originally, you have contracted 1 month benefit. which means X has agreed that I'll give 1 month benefit. Both the parties have signed the contract. Now, Y wants to make payment 15 days earlier. Can Y do that? Yes. And which seller will say, no, don't pay me the money? You will say, obviously, give me the money. But here, tell me one thing, people. When Y is making early payment, don't you think that he has the right to receive the interest from X? Why? Because when the original contract was made, X agreed to give a 1 month credit period to Y, which means Y agreed to make the payment only here. Now, due to some reason, X has arranged the money in advance. But the original contract says what? Pay after 1 month, which means the funds what Mr. X, Y is having here in his hand, instead of giving this to X for next 15 days, that is still the next due date, Y has got an option to invest this money elsewhere and earn money out of it. Yes or no? Guys, Y is having his money ready here. 15-3. On 15-3, Y is having his money ready. It is just suddenly it happened. So he will definitely give the payment here to X, but for that he will charge something in return from X. The reason being because the original contract date was 1/4, which means X is okay. X is okay to receive money on 1/4, which means on 15-3, whatever surplus money Y is having, he will not give that money idle. Till 1/4 comes, he will invest this money somewhere else. Let's say he's investing this money in the fixed deposit. Now imagine this sale is not 1,000 rupees. Imagine the sale is 1,000 crore rupees. 1,000 crore. 1,000 crore at the rate of 7% per annum. If you put a fixed deposit for 15 days, how much is the interest? Please calculate. 1,000 crore at the rate of 7% for 15 days.
70 crore.
70 crore is coming or 70 lakh is coming? Or 7 crore is coming? People are counting zeros, sir. 1,000 crore. How many zeros, sir?
70 crores.
Okay, 70 crores is what I'm getting the answer. Others? Sir, our calculator is not accommodating that much zero, sir. You change the question. Anyways, whatever is the answer, be it 7 lakh, be it 70 lakh, be it 7 crore, be it 70 crores, doesn't matter. Don't you think that this 1,000 crore, what is deposited in the bank for 15 days alone, is fetching you such a huge amount? Will anybody have the heart to let it go? Do you think Y will say, okay, 15 days earlier money, you take it, enjoy? Will he give that benefit to X? No, because Y has got a benefit of 1 month credit period. So he would want to definitely enjoy this credit period. So by any chance, if he's having the money arranged 15 days earlier itself, so he will not give that money 15 days earlier to X and Y. Sorry, he'll not give this money to X 15 days earlier out of love and affection. In business, love and affection doesn't work, please. Right? So Y will come and tell X that, look, Mr. X, I have 1,000 crore rupee ready for payment today. But originally we have contracted for 1 month credit period. So I don't want to deviate from this benefit, nor you would want to deviate from this benefit. So if you want, I will make the payment here, provided you give me interest. Now X is asking, why should I give interest? Y is saying that, see boss, till 1/4 you're okay if I make the payment. I have the money here ready. So if you don't pay me the interest, I will go and deposit this money in the bank, and bank will give me interest at the rate of 7% per annum. If you are willing to give me this money, if you are willing to pay me this money, then I'm willing to give this money to you itself. If you're willing to give me that interest, I will give you the entire lump amount today itself. That is on 15-3. Now, X will calculate 7% per annum means how much is for 15 days? 7 by 12, how much? 7% by 12, how much? 0.583. This is for 1 month. Divide by 2. And?
So 0.00583.
7 divided by 12.
So 7%.
7 divided by 12. Do 7 divided by 12. 0.583. Okay. Now this is for 1 month. This is interest for 1 month. Now divide by 2 because we want interest for 15 days. 2916. So 0.2916 is the interest percentage for 15 days. Now X will think that, okay, by paying this interest to Mr. Y, if I can make 0.35 percentage for 15 days, that is, for this period, he will pay 0.2916% to Y. And by getting this money, X will invest this money in his business, and his business, his product is giving a return of 0.35 percentage for that 15 days. So how much extra money will this guy make? 0. It cannot be 0.6. 0.35 minus 0.29. 0.06. So this is the additional money X is going to make. So X, if he feels that by getting early payment and by giving interest to Y, if he can make anything more than the interest what he's paying, then definitely X will agree for early payment and X will be agreeing for giving this interest. So are you clear with the concept of why interest is being charged for the early payment? Because if interest X is not giving to Y will not make the payment. Because if Y is not receiving that interest, Y will not pay the money because he will invest that money in the fixed deposit and he will earn some return there. So why is saying that if you want this money on 15th of March, you make the early payment. That is, if you want this money on 15th March, you pay me the interest. If you want early payment on 15th of March, you make me the interest payment. If you are willing to give me the interest, what the banker is going to give me for 15 days, then only I'll give you the payment. Justified or not justified? Online people, for late payment and early payment, interest received, interest paid is justified or not justified? Please tell me.
Yes, sir.
Perfect. So this is what here we are charging. X is charging interest for late payment. Here interest is charged. Charge means what? For Y it is an expense, and for X it is an income in case of late payment. For early payment, interest is
received by X.
Expense for X, interest is income for Y. Clear with this point? Now coming back to our transaction. Now guys, the thing what happened here is that X and Y are selling goods to each other. Like that, a credit period is agreed. But on that credit period, the money is not paid. On the credit period, the money is not paid. So can I say interest has to be calculated? Now the problem with this ledger, guys, if you see the problem with this ledger, it is very difficult for me to calculate the interest for each and every transaction because this does not give me the adequate information. What information am I looking for? Sir, for me to calculate interest, what do I need? Interest calculation formula is principal value, which is sale value or purchase value into interest percentage. What is interest percentage? 7 by 100, let's suppose, into number of days by 365. For me to calculate number of days, how will I calculate the number of days? Sir, I need to have a transaction date. I need to have a credit period added to it. So with transaction date, if I add credit period, for example, 1/3 was the transaction date. Guys, 1/3 was the transaction date. What is the credit period agreed? 1 month. So what is your due date? So transaction is 1 March plus credit period is 1 month. It is 1/4. Now, anywhere from the Y's ledger, are you in position to identify what is the due date? From this ledger, are you able to identify for this particular transaction what is the due date? For this transaction, what is the due date? For this transaction, what is the due date? For this transaction, what is the due date? Not possible. So this is one difficulty or challenge which I'm facing. Second is, once I get to know my due date, I want to calculate what is the difference between 1st March and 1/4. Let's suppose 1/4 is the due date. The actual date of payment is how much? 1/5. So this is the due date for payment. This is the due date for receipt. That is, this is the due date for actual receipt. This is the actual payment. Sorry. This is the due date for receiving the money. This is the actual date of payment. Actual date of payment, you'll get it in the Y's account. How? When money is received from Y. When money is received from Y, what is the entry? Cash account debit to Y. So can I say buy cash? This 1000 rupees I received by cash. When? On 1/5. This is the sale date. This is the money received date. In the question or in this particular ledger, do you know what is the due date? No. Until and unless you don't know the due date, unless and until you know the due date, how will you calculate the number of delays lag? Because I need number of days. I need number of days. How will I calculate number of days? From the due date to the actual payment or receipt date, I'll take the difference. You're supposed to make the payment on 1/4, but actual payment you made on 1/5. There's a delay in how many days? 30 days. Only when I know that 30 days, I'll put the number of days 30 days here. And then only I'm in position to calculate what interest. So please tell me, every single time, for every single transaction, if I want to calculate the interest, is this ledger facilitating the easy calculation? Please tell me, yes or no? Hello? No. It is not facilitating because I don't have a due date column here. Since due date column is not available here, I am not in position to calculate how many days there is a delay in payment, how many days there is a early payment. I'm not in position to calculate that. Therefore, my job of calculating interest becomes very time consuming. Very time consuming. So I want a document to be prepared in such a way that that document or that statement what I'm preparing should facilitate this wise ledger, plus also it should facilitate the additional calculation of interest. Are you able to understand what is the pain point in this particular ledger? This ledger does not give me the actual due date of the payment on sales or purchases. I need to calculate the number of days delay in payment, number of days early payment. I need to calculate. For me to calculate this, what do I need? I need the due date of the sale. I need the due date of the purchase. This I'll compare with the actual date of receipt of money, actual date of payment of money. So these both, when I compare, I get to know what is the delay in payment in number of days, what is the early payment in number of days. Am I right or wrong? Online people. So this particular ledger does not facilitate the number of days to be calculated, because of which the calculation of interest becomes very difficult. Hello? Only if you understand what is the pain point we are facing in this particular ledger format, then only you'll understand why we have evolved and gone to the next level of ledger, which is called as account credit. Tell me people, is this problem clear in your mind or not? The second problem that we are facing is that, let's suppose the sale which is done on 1 March, the delay has happened and the payment is happening on 1/5. So there is a delay of how many months? 1 month, because 1/4 is the sale date. Credit period allowed is 1 month. So what is the due date? 1/4 is the due date, but the payment is made on 1/5. So can I say 1 month lag? So what is the interest entry to be recorded in the X book? What is the interest entry you record in X book? Y account debit to interest income. So guys, here who is going to receive interest? X is going to receive interest because Y has delayed the payment. So Y has to give interest to X. So X will receive. So in the X books of account, Y account debit. Y account debit because we have to receive this much of money from Y. And this money what we are going to receive, this is my income. Interest calculation. 1000 rupees into, let's take interest percentage 12% per annum. So 12 by 100, and the delay is for 1 month. So 1/12. Can you please tell me the interest? 10 rupees is the interest. So how do you record? Y account debit to interest income. So in Y's account, can I say to interest income? To interest income. How much? 10 rupees. This interest is calculated on 1/5. Now the problem is like that interest income. Now let's suppose this purchase is there. We have done purchase on when? 3rd March. Credit period agreed is 1 month, which is 3/4. But we made the payment on 3/5. So 3/5 we made payment to cash 500 rupees. Can I say we also delayed a payment of 1 month? We also delayed payment for 1 month. So what entry will record now? Interest expense, debit all expense and losses. Now we have to pay this money to Y. Anything that we have to pay to Y, we have to credit. Liability has to be created. So now what will be the calculation? 500 into 12 by 100 into 1/12. 5 rupees. 5 rupees. We have to make 5 rupees here. So what will be the entry? By interest expenditure. Correct, no? In Y's account, by interest. So by interest, 5 rupees. By interest, 5 rupees. Like that, for every transaction, if there is a delay in payment or early payment, you will keep on adding interest here. Interest will come here, interest will come here. So which interest is belonging for which transaction are you in position to identify? So this interest what you paid, this interest is for which transaction? No idea. Which means if I want to draw some analysis out of this document, which is Wise ledger, this ledger is not throwing me any information. This brings down to the second problem in preparing the Wise account. So these two problems, is it good enough for me to now explain what is account current? Now in account current, guys, we are going to prepare the same Wise ledger, but there, in addition to these three columns, which three column? We have date column, we have particulars column, we have amount column. In addition to these three columns, we'll prepare additional three more columns. Can you see the green ones? Date column, particulars column, amount column. Can I say it is exact replica of your Wise ledger debit side? Now look at the yellow column, due date column, days column, and interest receivable column. These are the three additional columns that we are going to add. To find out, first thing, what is the due date for the sale transaction? So we wanted due date. In this ledger, the problem what we faced was I did not have a due date column. Therefore, since due date was not available, I could not calculate the difference between the due date and the actual date of receipt and payment. Therefore, I was not in position to calculate the number of days delay in payment, number of days early payment. So to mitigate that problem in the account current, we have introduced a due date column. Now we have transaction date, guys. Now we have due date. We have due date here. Can we calculate the number of days in delay in payment, number of days delay in payment, number of days early payment? So I have days column also. And one more column we are adding is interest column. So when I add interest column, for each and every transaction, what is the interest amount? For each and every transaction, what is the interest to be received or interest to be paid? For each transaction, and against the transaction, adjacent to the transaction, we capture interest. So we will get to know that for this particular transaction, what is my interest? For this particular transaction, what is my interest? So the two problems what we faced is being solved in this account current. So if you see, account current is nothing but, guys, it is an extension of ledger format only. If you look at the format of account current, I'll draw it for you. It is exact replica of your ledger. The only difference is in the normal ledger, we had date column, particulars column, amount column. Here, in addition to three, we have one more column called as due date column, number of days column, and interest column. In the normal ledger, guys, normal Wise ledger, what we had date column. Don't write anything. Don't write. I'll give you a proper format. I'm just doing a rough thing. We had already date column. We had particulars column. We had rupees amount column. Correct? Now here, in addition to that, we are having due date column, number of days column, and finally interest column. This is the debit side of the ledger. This is the debit side of the ledger. This is the credit side of the ledger. Again, same thing, copy paste on the credit side. What? So date, particulars, rupees. Same thing, no change. From the ledger, I'm copy pasting. Additional column is due date column, number of days column, interest column. Any problem? So, coming back. What is account current? Sir, account current is a statement. It is a statement which is an extension of a ledger. Can I say this is an extension of ledger? Ledger, you had 3 columns on each side. Now it has become additional 3 columns, which is totally 6 columns on each side. So can I say it is an extension of ledger, online people? Hello? Yes or no?
Yes, sir.
Yes, sir.
Sir.
Now, with additional 3 columns, why this additional 3 columns has been designed? Why are we adding those additional 3 columns? Because that will facilitate the calculation of interest receivable and interest payable against each transaction. Yes or no? Any difficulty? In a simple layman language, I've explained what is account current. So in preparation of the normal ledger, we had a problem. See, normal ledger, buy ledger is okay when you're doing purchase sale, no interest, then buy ledger is okay. But wherever in business, You are agreeing a credit period. And upon the credit period agreed, on the due date, if the payment is not made, the payment is made late or the payment is made early. And for that, the businessmen are agreeing between each other that for that interest will be charged. If they're agreeing on that concept, the normal wise ledger becomes very difficult to be prepared. So in any business where a credit period is allowed, and for not making the payment on the due date, if the interest is coming into picture, then for that reason, it is always advisable to prepare an account current. Because account current will facilitate for each transaction how much interest is to be charged, how much interest is to be collected. So that the format is designed in such a way, guys, you don't have to break anything. You don't have to break your head at all. Just follow this format. At the end, the balancing, the way you do the balancing of the ledger, not do the balancing of this ledger. Automatically, the ledger will tell you what is the total amount that you have to collect from Y. In that, how much is the principal amount? How much is the interest amount? How is principal amount calculated? X has sold goods to Y. So can I say X has to receive the money? Then X has purchased from Y. So can I say X has to pay money? So receive money minus pay money. Can I say this is the net receipt or net payment? For example, X has to receive 100 rupees from Y because he has sold 100 rupees worth of goods to Y. So we have to receive from Y 100 rupees. Now X is purchased from Y. So X has to pay money. Let's say the purchase value is 20 rupees. So how much money, balance money? 80. Who will pay to whom? This 80, who will pay to whom?
Y
X has to
X.
pay to Y. So this is the net principal amount. How much we have to pay has been agreed. Now let's suppose this 100 rupees, there is a delay in receipt. This 20 rupees, there is a delay in payment. So on that, the interest charge is 10 rupees. On this, the interest charge is 2 rupees. So what is the net amount? 8 rupees. No, this interest is income for X. This interest is expense for Y. Sorry, expense for X. Correct, no? Why? X is supposed to receive 100 rupees on a due date. He did not receive on due date. He received later. So he is collecting interest on that 100 rupees. So can I say this is income for X? Similarly, X is supposed to pay 20 rupees to Y because he purchased goods. He is supposed to make the payment on due date, but he did not make the payment on due date. He made it late. So he had to pay interest to whom? Y. So expense. So net income is how much for X? Net income is how much? 8 rupees. Now in total, how much money should we receive from Y? Total 88. 80 is the principal amount. 8 is the interest amount. Calculating everything individually is very time consuming job. And sometimes when the transactions are numerous, people get confused. Which money we have to collect from whom? For what transaction? Everything will collapse. But here, the way the account current ledger has been designed, you don't have to do anything, guys. You just have to fill in the format. Automatically, the ledger will throw you what is the net interest to be collected. And this net interest, you will add it with the principal value and you'll get to know what is the net principal you have to receive or pay. That is how the format has been designed. So when you see 2-3 questions, you'll get a complete flow of this particular topic. But as of now, can I say that this account current is nothing but it is an extension of the ledger, wherein we have added 3 columns, which is due date column, number of days column, and interest column. Now, when we do next method, instead of interest column, there will be product column. Correct? In such a way that it facilitates the calculation of interest receivable and interest payable for each and every transaction. If this is clear, can I go forward, online people? Hello?
Yes, sir.
Yes, sir.
Fantastic. So let's
Yes,
take
sir.
the first question of yours, ICA study module. First question of your ICA study material, which says that prepare account current of Nath brothers in respect of the following transaction with Shams. Prepare account current for Nath brothers in respect of the following transaction with Sham. So my question to all of you is that we are accountant of whom? Are we accountant of Nath brothers or are we accountant of Sham?
And now for this.
Who is the businessman? Who's the what do you call third party?
Nath brother is the businessman.
Correct. For the businessman only we are preparing account current. So prepare account current for businessman Nath brother because he had some transactions with Sham. So Sham is the party from whom we have purchased and sold the goods. Now all the transactions given one by one, guys. In 2019, September 16, the goods has been sold to Sham. October 1, cash is received. October 21, cash is, goods is purchased, all the transaction is given, and the respective due date also is given. For sale, what is the due date? For purchase, what is the due date? If you can see here, there's a due date column. This is the due date. At the end, they're telling that the account is to be prepared up to 1st February. The account is to be prepared for the 1st February. Calculate interest at the 6% per annum and take 1 year is equal to 365 days. Now, the question that arises is that, so the account is to be prepared for the 1st Feb. What are telling? What does it mean? They are telling that this account current, what you're preparing, this should be up to 1st Feb only, not 31st March. Normally, when we prepare the accounts, we prepare for 31st March. Here they're telling that prepare this statement up to 1st Feb. Now, this you will understand when you start doing the practical question. So please draw this format, people. Heading slightly different. Now, please understand. Normally, what do we write? In the books of Nath brothers, Sham account. Am I right? And you prepare the Sham's ledger. Hello? Yes or no? Online people. Normally, how do we write?
Yes,
in the books of Nath brothers? This is Sham account. Yes or no? Yes, no response,
Yes,
no
sir.
energy. I'm going. Bye. Same
Yes,
with
sir.
offline people also. No energy.
Yes,
I'm going.
sir.
Bye. Now here, the heading will slightly differ. It says that Sham in account current with Nath brothers. We are preparing the account current of whom? Sham. Sham in account current. Sham in account current with Nath brothers. So normally, what do we do? First is the businessman's name, followed by the party name. Here, it will be ulta. First, it will be the party name, followed by the businessman name. Any problem? So how will we write? We'll write this as Sham in account current with Nath brothers. So this is my party. So first name here is my party always. And the second name always is the business. You can make a note here. You can make a note here in your notebook also, or in your scanners also. This is party. This is businessman for whom we are preparing the accounts. Now, people, the format is very important. Please write the same format in transaction date, particulars, due date, amount, days. Now, here, write the same way as of now. Just write it interest receivable plus interest payable reversal. Like that, just write it. I'll explain what this is when I do a practical question or when I do this question itself. Normally, if you write interest, it is more than sufficient. But we have to understand this interest means what? Is it income? Is it expense? Is it receivable? Is it payable? So people get confusion. So for that reason only, I given a clarity here. As of now, please write it interest receivable plus interest payables reversal. This is the debit side part. Then draw the line. Credit side part, just copy paste as it is. Transaction date, particulars, due date, amount, days. Now there it will be interest payable plus interest receivables reversal. Write it. I'll explain what that means.
So we should do it like on 2 pages now. It'll be better.
Yeah. So now what happens is, guys, definitely your one side is not sufficient. So in examination, what will you do is basically you have a paper like this. So this is the left hand side paper and this is your right hand side. So always you will start question afresh in the next page. So what you'll do is here it will be your margin. Here you'll have your margin and here you'll have your margin. So what you will do is you will utilize this space. You will utilize this space. You are not going to use margin. You are not going to use margin. So how will you draw this? We're going to use this space fully. So you will draw the line like this and a center line. Somewhere either here or here. You can draw a center line. So you'll be utilizing this space and this space. The purple line is margin. The purple line, this is margin. Margin will not be used. So your left hand side of the sheet will be your debit side. Your right hand side of the sheet will be your credit side. If you try to do it in one side, it will become too congested for the person to write also and for the evaluator to correct also. So it becomes difficult. So you can write it a little bit broader only. Done with the format? Guys, don't turn the notebook or in the examination or don't turn the answer sheet upside down. If you turn it, it will be the presentation will be very horrible. Please don't turn the page. Do you understand what is the turning of page? Don't turn it other ways around. Just same way you write. The same rule line you write it. If this is the paper, this is the rule line. Don't turn it like this. Don't turn like this and write. So the heading is people, Sham in account current with Nath brothers. This is the first heading. Second heading is interest up to 1st Feb 2020 at 6% per annum, because this account current is prepared up to 1st Feb. So from the transaction date, from September 16 to 1st Feb, this account current statement is prepared for. So you have to write the second liner there in the top saying that interest up to 1st Feb 2020 at the rate of 6% per annum. This is the second line you will record. Done? So first line, second line, and the format. Done or not done, people?
So 1 minute.
Now, the first transaction says September 2016, which is in 2019, we are recording September 16 transaction. So what you can do is that here, please write on the top 2019, because every transaction we cannot keep on writing 2019 to save time. Write 2019 on both the sides. First, once you've completed the format, just immediately next line 2019. Then record the first transaction, people. The first transaction is taking place on September 16. So come back here, September 16. Now it is a sale transaction. It says that goods sold to Sham. Can you please tell me the journal entry for this? Sham account debit, 2 sales. So can I say this ledger what we are preparing is Sham's ledger? It is an extension, but no doubt it is a Sham's ledger. So in Sham's ledger, can I say 2 sales? So 2 sales. In the Sham's ledger, this is Sham's ledger. This format is Sham's ledger. 2 sales. What is the amount? 200 rupees in amount column. 200 rupees in the amount column. Then question further says that it is due on 1st October. What is the due date of this? Guys, what is the due date? October 1. October 1 is the due date. Now listen to me very carefully. Guys, when we are recording the sale transaction, when you are recording this transaction, immediately you will calculate the number of days from due date to the up to the account current statement date. What is the account current statement date? 1st of Jan. So from due date October 1 till 1st Feb, you have to calculate the number of days. So can you please calculate the number of days? So we are on October 1. Due date is October 1. In October, totally how many days? 31 days. In that, the due date is 1st, which means 1st till midnight, you have time. So 1st till midnight, if I make payment, no interest. But from 2nd October onwards, interest will start calculated. So 31 minus 1. So can I say, if there is a delay in payment in October, 30 days is the total delay in payment. Let's suppose you're not making the payment at all. So can I say October, there is a 30 days delay because you're supposed to make the payment on 1st October. You've not made the payment. So interest will be calculated on October 30 days plus. After October, how many? Next month is November. November, how many days? 30 days. Then December, 31 days. Plus January, 31 days. Plus Feb, 1, because you're making the payment on Feb 1st. So the first interest will be calculated. So can I say there is a delay in 123 days? Now guys, we are presuming, listen to me very carefully. You have made a sale on September 16. On September 16 itself, You are assuming that till 1st of Feb, this guy will not make the payment. This guy means who? Sham will not make the payment. Like that, you're presuming, mark my word, we're assuming that he'll not make the payment and we're calculating the interest. So now, guys, I need to calculate interest for how many days? 123 days. So what is the principal amount? 200. So 200 into 6% into 123 divided by 365. 4.04, which means this person Sham is supposed to make us payment on October 1. We are assuming that till 1st Feb, this guy is not making a payment. Therefore, there's a delay in payment for 123 days. In case for 123 days, there is a delay in payment. In case there is a delay in payment for 123 days, Sham is supposed to pay us how much interest? 4.04, which means how much interest we have to receive? 4.04. So now, guys, this interest 4.04 from our viewpoint, this is Sham's account, but in books of Nath Brothers, in our book. So this 4.04 for Nath Brothers, it is receivable or payable? Receivable. That's why I recorded this in the interest receivable column. Any problem? Which means that against this particular transaction, I will be getting an interest of 4.04 rupees if this fellow does not make me the payment on or up to 1st Feb. Again, I repeat one more time. 4.04 rupees is the interest that I'll receive from Sham in case he does not make the payment till 1st Feb, which means he's making the payment on 2nd Feb. So till that date, the interest what I'll calculate is 4.04. Now you may ask a question, sir, what if this fellow pays the money and on the due date? What if this fellow pays the money on, let's say, 30 of October? What if this guy makes the payment on November? What will you do? To that extent, we'll reverse the interest. Please hold on. I'll tell you what. Now, see, as you expected, October 1. Cash received from Sham. How much? 90 rupees. Cash is received from Sham. What is the journal entry? Cash account debit to Sham. So this is Sham's ledger. In Sham's ledger, can I say buy cash? So 2019 October 1, buy cash. How much? 90 rupees. So this 90 rupees what Sham is giving us, can I say it is against the 200 rupees? Hello? This 90 rupees, why is Sham giving money? Because he has purchased goods from us worth 200. We sold him goods worth 200. So we received from him 90 rupees. So out of 200, how much money is received? 90 is received. When did we receive? October 1. When are we supposed to receive this 200 rupees? October 1. You are supposed to receive this 200 on October 1. On October 1, how much money you received? 90 rupees. So can I say this fellow, as agreed, 90 rupees at least he has paid on time. So can I say here, you have calculated extra interest on that 90 rupees? Yes or no? On the 90 rupees, guys, please understand, we are recording this 4.04 when? On September 16. On September 16, you decided this fellow will not pay the money on time. And you said that interest receivable is 4.04. But what did he do? He honored his promise to the extent of 90 rupees. So on the due date, I got correctly 90 rupees. So on that 90 rupees, is Sham supposed to pay his interest? But this 4.4 says that on full 200, interest has to be receivable. So can I say now, to that extent of 90 rupees, the interest what you calculated here, we have to reverse the interest. Makes sense, no? So here what will be my due date? For all cash receipt, for all cash payment, the due date and the transaction date will be the same, because only in the purchase transaction and sale transaction date is different, due date is different. Why? Because there is an intermediary credit period. But for payment, what due date? For payment, do we have any due date? This fellow is coming and paying me the money on October 1. So due date also will be October 1 only. Now, guys, we have to reverse the interest on this 90 rupees. How will we reverse? Sir, from October 1 till Feb 1, you calculated interest on this 90 rupees for how many days? 123 days. So for same 123 days, we have to reverse the interest. So 90 rupees into 6% into 123 divided by 365. 1.82. Now, please understand what does this mean. Guys, you are saying that interest receivable is this, interest payable is this. How much was interest receivable? 4.04. What is interest receivable reversed? This is interest receivable reversed. Please understand, if this is interest receivable, to increase my interest income, debit. To decrease my interest income, that is to reverse my interest payable, also credit. Correct, no? So credit side doesn't mean only interest payable. Reversal of the interest receivable. Reversal of the interest receivable also is credit. Interest receivable reversal. IRR. Interest receivable reversal. Guys, interest receivable. Positive means debit. To reduce my interest receivable, what should I do? Minus interest receivable. Correct, no? Credit. For example, 4.04 is interest receivable. Am I right? Positive. Debit. Now, I want to reduce this interest receivable. So what will I do? 1 point. How much was interest receivable reversal? 82. So can I say interest receivable reversal means minus? In accountancy, if debit is plus, then minus will be credit. So what is the net amount? 2.22. Is it? Interest receivable debit balance. Am I right? So here can I say this 1.82 what you're recording is nothing but this is plus means this is minus. If debit is plus, credit is minus. If debit is minus, credit is plus. So automatically now we try to balance it, guys. Please try to balance this. How much you're getting? Balance, carry down. 2.22. Where is the brought down coming here? Brought down is 2.22. If brought down is coming 2.22 on debit side, it becomes what balance? Debit balance. Debit balance means receivable or payable? Receivable. So can I say the format in which this account current statement is designed automatically takes care of all the calculations. So can I see here 4.04 on debit, 1.82 on credit, automatically will give me a balance of 2.22. Yes or no? So here, guys, the sale happened on which date? 16th September. And this is account current date, which is 1 February. So for 123 days, you presume that this fellow will not pay me the money. So you charged an interest of 4.04. But to your surprise, on 1st October, he paid the money to the extent of 90 rupees. So you calculate interest not from this date. You calculate interest from this date. Yeah. So 123 days delays from 110 to 12. So 123 days, there is a delay you assumed, and you said that 4.404 is the money what Sham has to pay you. But to your surprise, this fellow has paid me the payment. How much? He has made 90 rupees payment on the due date. So to that extent, I need to minus the interest on this 90 rupees to the extent of 123 days, which is how much? 1.82. So which will give me the balance, which is 2.22, which is nothing but the interest of balance. How much amount? 200 minus 90 is how much? 110 into 6% into 123 divided by 365. How much? Same amount. So which means this 2.2 is nothing but out of 200 rupees, 90 is paid on time. This 110 is still not paid. So balance in that ledger is nothing but the interest element on the 110 rupees. Tell me, people, convinced or not convinced? Danish is like, sir, you move on, sir. Convinced. Too much of dragging explanation. Why I'm dragging the explanation is because sometimes, people don't give me that facial reaction. So some people, in some face, I can see that question mark. So I keep on, நம்ம தமிழ்ல சொல்றல அரைச்சமாவை திருப்பி திருப்பி அரைக்கிறது. அப்படிதான் அரைச்சிட்டு இருக்கேன் நான். சொல்லுங்கண்ணா. ரொம்ப முக்கியம். இப்படி வரணும். You have to come this side. Okay, I've increased it. 24. Okay. Now, October 21 people, October 21, the third transaction, goods purchased from Sham for 500 rupees. What would be the journal entry? Purchase account debit to Sham. So can I say in Sham's ledger buy purchase? Buy purchase. When? October 21. So October 21, if I write buy purchase, all of you doing along with me, no? Buy purchase, how much? What is the value? 500. What is the due date agreed? Guys, due date is December 1. So December 01. Any problem? Now guys, due date is December 1, which means who has to make the payment to whom on December 1? Who will make the payment to whom on December 1?
Nath
We
brothers
have to
to
pay.
Sham.
We are Nath Brothers accountants. We have to make the payment to Sham. Now what will we presume? We are presuming when we are making the payment, sorry, when we are recording this purchase transaction, we are presuming that we are not making the payment till 1st Feb. So can I say from December 1 due date till 1st Feb, we have to calculate the number of days, and on that interest has to be calculated. So how much delay in days? So December totally we have 31 days, sir. In that first day, leave it. So balance is how much? 30 days. 30 days of December plus 31 days of Jan plus 1 day of February. So we are assuming that we might delay the payment for 62 days. We are assuming. So what is the interest? 500 into 6% into 62 divided by 365. 5.10 is the interest that who has to pay to whom? Who has to pay to whom? We have to pay to Sham. So for us, it is interest receivable or payable? Payable. So credit side, interest payable. So credit side, I told you two things will come. Interest payable will come or interest receivables reversal will come. So can I say the first 182? First 1.82 is nothing but interest receivable ka reversal. And next 5.10 what you record is nothing but interest payable because it is liability. We have to make the payment. Liability is a what balance? Credit balance. So anything that you have to pay in future is a liability. Now people, till that anyone got any doubt? Online people, hello. Disha, Kushal,
No doubt, sir.
Mokshita, Nanda, Naman, Navya, Akash, Srinidhi.
No, sir.
Sir, can you explain one, sir?
Sorry,
Can you explain one, sir?
which one?
By cash?
By cash wala.
Yes, sir.
By cash is what? This is the money received now. Which particular column you have a doubt?
So interest receivable.
1.82.
Sir,
This
for how many
1.82.
days, sir?
ये 1.82 समझ में नहीं आया क्या करके?
Yes, sir.
Okay. My God. When did sale take place, Naman?
October 1.
September 16?
Yes, sir.
Okay. What is the due date for this payment?
October 1.
October 1. On this October 1, if you receive full 200 rupees payment, do you have any problem? Will you charge any interest from Sham?
No, sir.
No. So you are assuming when you are making a sale, you guys, please no talking, please cooperate. When you're making a sale transaction, Naman, we are agreeing that we are not making we are not receiving the payment till 1st Feb. So for 123 days, we calculated the interest, which is nothing but 4.04, correct?
Yes, sir.
But this fellow has made a payment on the due date to the extent of how much money?
90 rupees.
90 rupees का उसने पेमेंट अपने को कर दिया. तो मतलब अक्टूबर 1 को जब तूने इंटरेस्ट कैलकुलेट किया था 4.04, हम ये सोच के कैलकुलेट किए कि वो पैसा 1st फेब तक नहीं आएगा, बराबर?
Yes, sir.
बट टू आवर सरप्राइज अक्टूबर 1 तारीख को ही 90 रुपीस आ गया अपने को. ड्यू डेट पे पैसा जो मिल जाता है उसके ऊपर अपने इंटरेस्ट कैलकुलेट करेंगे क्या? ड्यू डेट पे अगर पैसा मिल जाता है तो इंटरेस्ट उसको चार्ज करेंगे क्या शाम से?
No, sir.
नहीं करेंगे. बट यहाँ पे अपने 4.04 पे चार्ज कर लिए, तो कैन आई से दिस चार्ज को रिवर्स करना पड़ेगा.
Yes, sir. Correct.
Therefore, on 90 rupees at the rate of 6% for 123 days, the interest is 1.82, which you have to reverse. 4.04 से माइनस करने वाले हैं.
Yes, sir.
समझ में आया अभी? So this 1.82 is what? Interest payable or interest receivable? और interest receivable का रिवर्सल है या interest payable का रिवर्सल है?
Interest receivable. Reversal.
Interest receivable?
Reversal.
Reversal कर रहे हैं. That is why it is coming on credit side. Now clear?
Yes, sir.
1.82.
Clear, sir.
Now, November 1 paid to Sham 330 rupees, guys. November 1 paid to Sham 330. Who's paying to whom? Nath Brothers, we are paying to Sham. What is the payment entry? We are paying the money. So cash goes out. Credit what goes out. So 2 cash. So Sham account debit, 2 cash. Sham account debit, 2 cash. So in Sam's ledger, 2 cash. On November 1, 2 cash. How much? 330. What is the due date? Same November 1, sir. For November 1, for cash payment, cash receipt, whatever transaction date is there, that will be the due date. Only for purchase and sale transaction, due date and transaction date will be different. For cash payment and cash receipt, due date and transaction date will be same. Because for receipt payment, what due date will calculate? Do we have any due date for that? No. I'll tell that. No, as of now, don't round off. As of now, keep it as it is. 4.04. Like after decimal, 2 points. Keep it as it is. Will not round off. 330 rupees, guys. Now understand very clearly. We have to make him payment how much? 500 rupees. Guys, only in the first question, I'm taking so much of time to explain the concept. Because if I don't explain the concept, you will not understand what are we doing. So in the first question alone, we'll take time to, discuss what is the concept. Second question onwards, I'll not discuss. I'll directly do the question. Because you know how to do it, I'll directly do it. In the first question alone, I'll take some time to explain. When is the purchase done, guys? When is the purchase done? Purchase. October 21, correct. Sorry, yes. So October 21. What is the due date of this purchase? That is when do you have to make the payment? When is the payment due?
December 1.
December 1. December 1 is the due date for payment. When we recorded this purchase transaction, guys, we presumed on that day that we will not make the payment on due date. And we will not make the payment till 1st Feb. We presumed that, we assumed that, and we said that there is a delay of how many days? 60? 62 days ka delay will be there. Like that we assumed. And on that the interest what we calculated was 5.10. Now out of this 500 rupees, we have made a payment of 330. When? You made the payment on November 1. Can I say you made an early payment? You made an early payment. Now you have to do 2 things. One, you calculated on this 330 rupees delayed payment. So for this period, you have to reverse the interest. For 62 days, you said that 500 rupees you will not pay on the due date. Hence, there's a delay of 62 days. Therefore, on this 500 rupees, you have calculated what? Interest. But can I say out of this 500 rupees, 330 rupees is paid? Not on due date, 1 month before due date. So 2 things I have to do. To this extent, we have to reverse interest. For the extent of 62 days, we have to reverse the interest. And to the extent of another 30 days, we have to collect. No, so we have made early payment. So you have to collect interest from whom? Sham. Understand one more time. I'm telling you very clearly. Guys, first purchase transaction. When was the purchase done? October 21. What is the due date of payment? December 1. What is the value that you're supposed to pay? 500. You assume that you will not make the payment till 1st Feb and you will make the payment after 1st Feb. Therefore, there's a delay of how many days? 62 days. So for the 62 days delay, what is the interest that you have to pay to Sham? 5.10. But to your surprise, what happened? You made the payment on 1st of November itself. How much money? 330 rupees. 2 things happened. One is that the extra payment what you to the extent of this 330 rupees, you have to reverse your interest on 62 days. Correct? Yes or no? Plus, since you made 1 month early payment, you made 1 month early payment to whom? Sham. So Sham is enjoying 1 month early payment. So for 1 month, we have to receive interest from whom? Sham. You don't have to sit and do anything, guys. Automatically, if you calculate the interest here, no, here automatically everything will take care of. But I'm just giving you an idea how things works. Now, please tell me. November 1 is the due date. From November 1 to 1st Feb. November 1 to 1st Feb. How many days advance you have paid the money? Sir, November is totally 30 days. In that 1 day of November gone. Plus December 31 days. Plus Jan 31 days. Plus 1 February. 92 days. So in this 92 days, if I have to break up, this 92 days has got two components. Reversal of interest payable for 62 days. In this 92 days, if you minus 62 days, what will you get balance? 30 days. So this is 30 days is nothing but you're making the payment on November 1 now. You're making 1 month early payment. What is the gap between November 1 and December 1? 30 days. 30 days early payment. So you are calculating interest for total 92 days. In that 62 days is interest payable ka reversal and 30 days ka interest is receivable. If you see this column, guys, what is it? What is the heading saying? Interest receivable. We have to receive interest from whom? Sham. On which amount? 330 rupees. For how many days? 30 days. Why? Because we made 30 days early payment. When am I supposed to make payment to Sham? What is the due date of paying money to Sham? December 1. December 1, I'm supposed to make the payment. But I made the payment when? November 1. 30 days advance. So since we're making advance payment, I need to receive interest from him. Because he's enjoying my money in advance. So we will charge interest from him. Yes or no? If you give 30 days money to bank will pay you interest, no? Same way if you're giving that 30 days advance money to Sham has to pay me interest. So interest receivable. So out of 92 days, 30 days is interest receivable. And can I say balance 62 days is nothing but this is reversal of interest payable. Why reversal? When you calculated the interest 5.10, you presume that full 500 rupees payment will not come till 1st Feb. 1st Feb வரைக்கும் இந்த 500 ரூபாய் பைசா வராது. 1st Feb வரைக்கும் பைசா வராது நினைச்சு தான் interest calculate பண்ணீங்க. You calculated this 5.10 presuming that till 1st Feb the money will not come. Did money not come? It came, no? 330 rupees came. So to that extent, should I not reverse my interest? So that 62 is nothing but interest payable ka reversal, which is the second component. Interest receivable plus interest payable ka reversal. So 30 days plus 30 days of interest receivable, 62 days of interest payables reversal. If I add together, it becomes 92 days. How much? Calculate the interest. So 330 into 6% into 92 divided by 365. 5 rupees is reversal. Correct, no? 4.99. Okay. So now people listen to me very carefully. Listen. What was interest payable calculated? 5.10. Minus how much? 4.99. How much balance? 0.11. Can I write in this way also? 5.10 is interest payable minus interest payable ka reversal. So reversal means what? 330 rupees into 6% into 62 divided by 365. Because to the extent of 62 days, it is reversal of interest payable. How much is interest? 330 into 6% into 62 by 365. How much? 3.36. Minus is interest receivable. Sir, 330 into 6%, you paid 30 days in advance. So we have to receive interest from that fellow. How much now? 330 into 6% into 30 by 365. 1.62. Add these both. Add these both. 4.98. Exactly matching. 4.98 or 4.99. So the breakup of this 4.99 is nothing but, guys, the breakup of this 4.99 is nothing but these two. In this 4.99, what you're minusing, there are two components. To the extent of 3.36, it is interest payables receivable reversal. Interest payables reversal. And to the extent of 1.62, it is interest receivable. Yes or no? The interest what you calculated here on 500 rupees, we have to reverse it to the extent of 330 rupees for 62 days. Not only that, you made an early payment. So we have to charge 30 days ka interest more from that fellow. So 30 plus 62 is how much? 92 days. Now tell me, clear or not clear? So if you do 5.10 minus 4.99, balance is how much? 0.11. This is the amount who has to pay to whom? Nath brothers has to pay to Sham. Why? Because we were supposed to pay. Nath was supposed to pay Sham 5.10. Nath was supposed to receive from Sham 4.99. So net who has to pay whom? Nath has to pay to Sham. Net amount of how much? 0.11 if he pays more than sufficient. Hello? Yes or no? Now all this logic what I'm giving is only for your understanding to get a feel of this particular statement. Otherwise nothing, whatever concept I'm saying from examination point of view, the concept will not be tested. They'll only ask you to prepare this diagram. You know what is the format. You know how to calculate the interest. You can get it done very easily. But I'm giving you an idea that when you're recording information in the statement, how do you read that information? How do you understand that information is what I'm trying to explain? This you will not get anywhere, I'm telling you. Nobody has got time to explain all that. People will draw the format. Very, very rare. Very, very rare explanation. Moving on to the next point. December 1. Paid to Sham 330. December 1, paid to Sham 330. On December 1, total how much money we are supposed to pay him? 500. In that, 1 month earlier, we got already 330. Balance is how much? 170. On the due date, we are supposed to receive 170. But on the due date, we received 330. Extra, how much money we received? Extra, how much money we received? 160 rupees. Which means, on this 170 rupees, guys, 500 you are supposed to receive. In that 330 already received. So there's a delay in payment of how much? 170. Like that you assume. But that 170 payment also has come on. Correct. 500 rupees we are supposed to pay him. We paid 330 first. So balance we are supposed to pay him how much? 170. Then further we paid 330. Paid to Sham 330. So how much extra money we paid him? 160. Coming here. How much we are originally supposed to pay him? 500. In that, how much is paid? 330. So how much is the balance payable? 170. $170 is supposed to be paid when? December 01 you're supposed to pay. But on December 01, how much did you pay? 330 you paid. Extra how much did you pay? 160 rupees you paid. Which means what? Guys, can I say to the extent of 170, there is a interest that you've already recorded as 5.10, correct? No? $5.10 minus 3.36. How much? 5.10 minus 3.36 because interest payable is 5.10 on 500. Interest payable receivable is 3.36 on 330. So balance payable is 170. On that 170 interest is how much? 1.74. How do I calculate this? Sir, 170 is pending. 170 into 6% into 62 divided by 365. How much? 1.74. Same you're getting? What is this 1.74? You thought that original 500 will not be paid. Therefore, you said that 5.10 you have to pay interest. But in that already you made the payment of 330 rupees. So to the extent of 62 days, you reverse the interest. So balance 174 is the interest on the balance amount of 170. So for 170 rupees, for 62 days delay, the interest is 1.74. But you have received this money on the due date. So can I say this 1.74 I need to reverse? Because on the due date, the balance 170 is also received. So to this extent, interest payable needs to be reversed again. And for extra 160 what you paid on the due date, that is on December 1 to Feb 1, you need to collect interest from Sham, because Sham is enjoying 160 rupees extra from you. When you made the payment on December 1, on December 1, Sham is having extra 160 rupees, yes or no? So on that, he has to give us interest. You don't have to sit and do all this plus and minus, guys. This plus and minus is only for your knowledge. You have to just fill in this format. Automatically, everything will be taken care. Now, why did I give this explanations? Because in your mind, things will pop up. Sir, 500 rupees is supposed to be paid. In that, 330 is paid. Balance is how much? 170. On that interest, how much? I calculated and showed. Sir, 170 paid. 170 is to be paid. But 330 is paid. So, sir, on this 160 interest is receivable or not? Receivable. I've showed it on the whiteboard. So, this I'm giving an explanation to what we're doing in the Excel sheet or the account current statement. Nothing is required for the examination purpose. This is only for your understanding. Swati is very happy. Examination purpose not required? Appada. Then fine. This concept, you'll get a feel when you keep on doing it. When you initially, now when you're doing for the first time, no, you might not have that much doubt. When you'll have doubt, as in when you keep on doing this account current statement 10 times, then you'll understand. This fellow calculated interest for 500 rupees, 5.10. But this fellow paid on due date so much. Then this we have to minus. So why sir did not minus? Arey Baba, the format already minused. What interest payable, what you recorded 5.10 on credit, we have subtracted by putting that on debit. How much? 4.99. Already subtraction happened. So that time you'll have doubt. So that explanation I'm giving now itself. That's a different story. Now whatever I'm saying, it will go partly in your mind. Later you'll anyways forget. For that purpose only, I'm uploading this video on YouTube. N number of time you can sit and watch. Online people, how many of you are alive?
Sir,
Alive or gone?
alive.
Alive, very good. Now, to cash, how much? When is the payment happening? December 01, sir. What is the amount? 330. From December 1 to 1st Feb, how many days? Sir, December totally 31 days, sir. In that first day of December gone. So balance is 30 days. Plus Jan 31 days plus Feb 1 day. So total 62 days. So 330 into 6% into 62 divided by 365. So 3.36. 3.36. Any problem online people?
No, sir.
Now December 5. Goods purchase from Sham. Entry please. Purchase to Sham. So can I say buy purchase on December 5? Buy purchase. December 5 buy purchase. What is the due date? Jan 1 is the due date. So will you calculate the number of days from due date or transaction date? I knew. From due date or transaction date? Okay, from due date Jan 1. So Jan 1 totally how many days? Sorry, Jan month how many days? 31 days. In that first day of Jan gone. Plus 1 day of February. Total 31 days. What is the amount? 500. What is the interest calculation? Sir, 500 into 6% into 62. No, 31, sorry. 31 divided by 365. 2.55. How many people are getting this answer? 2.547 is 2.55. Just round off to 2 decimal. Round off to 2 decimal. After decimal, 2 points should come and those should be rounded off. 2.55. Then December 10. Again goods purchased from Sham for 200 rupees due on 1st Jan. December 10. Buy purchase due on Jan 1. Payment, sorry, amount 200. Can I say same 31? Can I say same 31 days? Interest please. 1.02. Online people please confirm.
Yes, sir.
Please
Yes,
write
sir.
this comment here. This 1.82 is what? Reversal of interest receivable. What is this 5.10, 2.55, 1.02? This is assumption that till first pay payment is not made, hence it is interest payable. Hence, interest payable. You can just make a note here so that you'll remember it later. So 5.10, 2.55 and 1.02 is nothing but we are assuming that till 1st Feb we are not making the payment and hence we are calculating the interest payable. So these 5.10, 2.55 and 1.02 is interest payable. Done? Next, 2020, Jan 1, pay to Sham. Pay to Sham. Journal entry, please. Sham to cash. Sham to cash. So please change the year. Please add the heading 2020 year. 2020. Jan 1. Payment is happening on Jan 1 people. How much? 600 rupees. So Sham to cash. 600 rupees. What is the due date? Same transaction date is due date for receipt and payment. How many days delay? 31 days. Already, guys, here we have calculated for Jan 1 what is the number of days. For each and every transaction, don't sit and calculate. Already we have calculated here. So 600 into 6% into 31 divided by 365. 3.06. Then Jan 9, goods sold to Sham. Entry, please. Sham to sales. Two sales on Jan 9. What is the due date? Hey. It is due on 1st February. Look at it. Due date is Feb 1. What is account current statement date? Feb 1. So due date to account current statement date. Feb 1 to Feb 1. How many days? 1 day, sister. Who's that? Feb 1 to Feb 1 is 1 day. 0 days. Amount, please. 20 rupees. Interest. Kana bed kondu vanduma? Parala. Porve, bed, talagani. You won't try. Apdi kondu vandrena. நீ போட் சொன்னா ரெக்லைனர் சோஃபா போடுறேன் அப்படியே மசாஜ் பண்ணிக்கலாம் பின்னாடி பண்ணிடலாமா okay anyways actually it's a good sign that he's so nicely liking my class that he's gone onto this mode now listen step 1 whenever the question is given you have to prepare this tabular column. First step, all the transactions has to be fitted in. Transaction date, particulars, due date, number of days, and the interest column. Interest has to be filled in the respective columns. After this, what you will do is the second step. Please listen carefully. Second step is you will identify the net interest, whether it is receivable or payable. Now, please tell me this column, guys. 4.04 plus 4.994 plus 3.36 plus 3.06. Is it interest receivable or payable? Online people no respond.
Interest receivable.
Interest receivable. What is the total, please? How much?
15.46.
15.46. Okay, perfect. Interest receivable means what? Who has to receive money from whom? Interest receivable.
Nath Brothers has to receive from Sham.
Nath Brothers has to receive from Sham. Correct? No. We have to receive. Receivable. Anything that I have to receive in future is receivable. So I need to receive from whom? Sham. So 15.46, Nath brother has to receive from Sham. Look at the arrow mark. Okay, not okay. Now, go to the other side. Interest payable. Do the total of this.
10.49.
10.48. 10.48. This is interest payable.
10.49.
48 or 49? 49. Then why are we getting 10.48 here? 1.82 plus 5.10 plus 2.55 plus 1.02. 10.48 you're getting? 49 you're getting. Okay. Anyways, 10.49. Now, who has to pay this money to whom or who has to receive? Or who has to pay? We are talking from Nath brothers' point of view. So Nath brother has to pay or receive?
Nath brothers has to pay to Shyam.
So Nath brother has to pay to Shyam. So Nath brother has to receive 15.46. We have to pay 10.49. We have to receive 15.46. We have to pay 10.49. So what do we say? This 15.46, what I have to receive? In that you minus the 10.49, what I have to pay you and give me the balance. We are telling to whom? So we are telling to Shyam. Nath brothers is telling to Shyam, Shyam, you have to pay me 15.46. From that 15.46, what I have to pay you 10.49, you minus and give me the balance. What is the balance that I have to receive? 4.97 is the balance interest receivable by Nath brothers from Shyam. Yes or no? Receivable. Anything that is receivable is a debit balance. It is an asset. So where should the balance come? Carried down balance should come on the credit side. Brought down should come on debit side. For a debit balance item, carried down balance will come on credit side. Brought down will come on debit side. So the brought down balance will determine which balance it is. So going back, carried on balance will come where? Credit side. So here please write 2020 heading. Feb 1 is the account current statement date. By balance of interest. By balance of interest. What are we trying to balance? We are trying to balance interest. What is the interest balance? 4 point? $4.97. 4.97 is balance interest. Please tell me, people, this 4.97 is interest receivable, net interest receivable. Guys, please understand, this is not a ledger. What is the accounting process? It starts with identifying a business financial transaction, measuring in terms of money, recording through journal, classifying through ledger. From ledger, it goes to trial balance. From trial balance, it goes to P&L and balance sheet. Is this document a part of my accounting process? Is this a part of my accounting process, or are we creating this in a separate document? It is a separate document. This is a separate document. So please tell me, interest receivable is 4.97. So what interest receivable entry should I record? I should record entry, no? In accounts, anything has to be captured, means it has to be captured by way of journal. It has to be captured by way of journal. So what is the interest receivable journal entry? We have to receive from Shyam. Anything that we have to receive from, yes, online somebody said something.
Interest account debit to the one who pays.
Interest account debit means debit all expense and losses. It is expense. This 4.97 is expense for Nath brothers or income from Nath brothers? For Nath brothers.
Income, sir.
Income,
Cash
no.
or bank
Income
account
means should be
debit to-
credited now. So what should be the entry? Shyam to
Cash or-
interest income. Shyam to interest income. Online people, hello? Yes or no?
Yes, sir.
The reason why I did this information here is to know that this 4.97 we have to receive. So anything that we receive is our income, no? So income is a credit balance as per nominal account, as per golden rule, credit all incomes and gains. So interest income is credited. What will you debit? The person from whom I should receive the money, I should debit him. Shyam. So Shyam account debit to interest income. So can I say on Feb 1st to interest income? How much? 4.97. Straight away in the outer column, we can write 4.97. Straight away in the outer column, 4.97. Any problem, online people? Sorry, which column we recorded? Not here, this year. 4.97. Guys, in the amount column, please be very careful. You should write in the amount column. Why? Because the amount column is the column that will tell us how much money we have to receive from Shyam. Yes, the amount column is the column which will tell us how much money we have to receive from Shyam and how much money we have to pay to Shyam. So this interest will record in which column? Correct? So this 200 is money which you have to receive from Shyam for sale done. This 330 rupees is the money that you have to receive from Shyam for the advance payment. This 600 is the money that you have to receive from Shyam for advance payment. This 20 rupees is the money that I received from Shyam for sale. This 4.97 is money that I have to receive for interest. So debit side amount means money receivable. Credit side amount here means money payable. So now guys, everything is done. Step 1 is what? Prepare that format. Calculate what is my interest and leave it. Second step is you have to balance the interest like 4.97. So first step which I've done in black. Second step I've done in red. And that 4.97 interest you recorded here as Feb 1. Here, okay. Now last step is what? You have to balance the Sham's ledger. So now tell me guys, total of debit side, is it more or total of credit side is more? Total of debit means 200 plus 330 plus 330 plus 600 plus 20 plus 4.97. Please tell me the total. Debit side total is how much? Okay. Jivika says 1484.97. Others? Is the same answer? Now, please do the total of the credit side amount. 90 plus 500 plus 500 plus 200. 1000 to 90. This is credit balance. This is positive, this is negative. Then, what is the balance? Debit or credit balance? Who said credit balance? Okay, wow. So can I say this is the balance carried down on credit side, and this will become balance brought down on debit side, because balance brought on debit side means debit balance. So coming back to here, debit side is more guys, credit side is less. So can I say by balance carried down 194.97? By balance carried down 194.97. And here Feb 01 to balance brought down 194.97. This is the opening balance on 1st Feb, or you can say Feb 2. 1st Feb closing balance becomes Feb 2's opening balance. So this is opening balance of Feb 2. Any problem? Which means, in short, this is the final amount that you have to receive, guys. The transaction that took place between Sham and Nath brothers continuously throughout the year. Giving, taking, giving, taking, giving, taking. The final net amount is 194.97, which who has to pay to whom? We have to receive from Sham. Sham has to pay to Nath brothers. This is the conclusion of all the calculation that you've done. This is the ultimate conclusion. This is the final amount that we have to receive from Sham. So this is total receivable. From that we are minusing the total payable. So obviously we'll get the net receivable. Any problem? Any difficulty in understanding? Sorry? In the scanner. This is different you're telling in scanner. I'll get it rectified. No problem. In the scanner. So we'll stick on to what we have done. In the textbook, what we have done. No, we'll always keep, if they're keeping 2 decimal, we'll always keep 2 decimal. So after 04, if it is 9, so it becomes 05. After 04, if it is 4, we have discussed what is round off in the average duty topic. So we'll follow that round off procedure. So round off to 2 decimal. If you watch average due date ka topic, bills of exchange, you will get the idea of how to do the round off. Because round off is already explained in the past 2 chapters. Guys, okay, not okay. 15.46, and here it is supposed to be 15.46 only. So please make a note. This I have to escalate to Anita now. Tell me people, any difficulty? This is the first method, which is forward method. So under forward method, you have 2 methods, interest method and product method. Interest method is also called a simple method. And now after the break, we'll do the product method. Okay, let's take a break, guys. Yes, people, welcome back to the break. So let's continue. So guys, before we went for the break, we understood that how do we calculate account current statement under forward method. So let's understand first of all, how many types of different methods are there. You can prepare the account current statement in two broad methods. One is forward method. Another one is called as backward method. Backward method is also known as epoch method. Epoch method. Again, this forward method is subclassified into two types. One is interest method. Second is product method. If I have to relate this, I relate this to the interest on drawing. In interest on drawing, we had method, no? Simple interest, product method, simple method, product method. So this interest method is like simple method under interest on drawing. This is simple method. This is product method. So let me give you a quick reminder. We completed this topic in the partnership fundamentals. So where we learned that the interest on drawing could be calculated by three methods. In that, the first method is simple method. Second is product method. Third is average period method. Forget average period. Let's do a quick comparison of simple and product. So under simple method, what happened, guys? When we calculated interest, for every single time we draw the money. So every single time we draw the money, for every single transaction, you calculated what? Interest. Which means on 1st May 2022, one partner withdrew 2,000 rupees on 1st May. So from 1st May to 31st of March, how many months? 11 months. So what was the calculation? Sir, 2,000 into 11 divided by 12 into what percentage? 15%. Correct, no? Or in other words, so 2,000 into 15% into 11 by 12. Correct? Second drawing is happening on 1st of August. So from 1st of August to 31st of March, how many months? From the partners withdrawn the money on 1st of August. From 1st of August to 31st March, how many months the money is enjoyed by the partner? 8 months. So for 8 months interest, how do we calculate? So 2,000 into 15% into 8 by 12. So for every single, sorry, 5,000. Yeah. So for every single transaction, you were calculating the formula. We have no problem in formula, but the formula is repeated every single time. So which formula are you talking about? This formula. This 2,000 into 15% into 11 by 12. 5,000 into 15% into 11 by 12. In that, please, sorry, into 8 by 12. 15% is nothing but, can I say 15 by 100? 15% is nothing but 15 by 100. 15 by 100. 15 by 100. Please tell me in this both formula, what is that one thing which is repeated? Subiksha, here. What is that one thing which is repeated again and again? Can I say this is repeated again and again? In every formula, 15 by 100 and divide by 12 is commonly getting repeated. What is getting changed? Amount and number of months is only getting changed. That is the reason some experts came out with the concept of product method. In product method, what they did, this 2,000 to 11, they multiplied. So 2,000 into 11 when you multiply, now what is the revised formula? Into 15 by 100 into 1 by 12. So when you take this 11 to this side, if you multiply 11 with 2,000 here, this becomes 1 mathematically. Yes or no? So this formula is a product method formula. What do we say? Total product into 15 by 100 into 1 by 12. So in product method, what do? We multiply the amount and the number of months. We get the total product. Amount and number of months. So 2011. 2011 plus 5,000 into 8. Like that, we keep on multiplying, adding. So what will we get? We'll get total product. That total product you multiply with the rate of interest by 100 into 1 by 12. So this brings down to the concept of product method. So in this, what happens? In this, guys, you apply this formula how many times? Only once. How? Sir, amount into months. Amount into months. Like that, you got the total product. Correct, no? Then what is the formula? Total product into 15 by 100 into 1 by 12. So this formula, how many times did you apply? only one time. So in product method, ultimately answer will be same. What you did, these two amount which you multiply in individual formula, you multiply together in a tabular column and you multiply the rest of the formula with the total of that. Correct, no? Here what you do, every single time. So next amount is what? 2000. Again 2000 into 15 by 100 into 6 by 12. So this 15 by 112 is getting repeated. What is changing? 2000 and 6000 is only changing. So we are multiplying all that and adding. So that will give me total product, total amount. That I multiply 15 by 100 into 1 by 12. So what is the difference between simple and product method? Sir, in simple and product method, in both this method, the ultimate answer is going to be the same. Simple method is a laborious method. For each and every transaction, I have to independently apply the formula. Every single time I have to apply the formula. So it takes a lot of time. It's a time consuming process. In product method, we are getting the same answer, but we have simplified the procedure. We are using the formula only one time, that too at the end. And we're getting the same answer, 1075. Correct, no? Ultimately, this is the total interest of all the transaction, 1075. Same answer. But here we're applying only formula once. Same way, here under forward method, if you are calculating the interest method, the method what we did now, touch your heart and tell me, for every single transaction, did you not sit and calculate the interest? This 4.04%, how did you get? Sir, 200 into 6% into 123 divided by 365. Like that, for every single transaction, we literally sat and calculated what? Interest. Is it time consuming or not? That's the reason, to save the time, we are coming out with another method called as product method, wherein we'll calculate the product. We'll get the net product. On that net product, we'll calculate the interest and game over. So can we do the same question, guys? If you look at the ICA module second question, same question of Sham and Nath brothers, but we are doing that in the product method. So please, all of you take the format and draw the format. Only one change. Here, instead of interest receivable and interest payable reversal heading, you will record product. So this brings down to the second method. So wherein date, particulars, due date, amount, days, everything remains as is. Instead of interest, it will be product. Same way here also, instead of interest, it will be product. So please, let's do this. So method 2, preparation of account current by means of product method. So we're taking the same question, guys. Sham and account current with Nath brothers. Same question. Interest up to 1st February 2020 at the rate of 6% per annum. Same heading, guys. Same heading. If you look at the format also, it is date, particulars, due date, amount, days. Instead of interest, it is now product. In between the line is coming. Again, date, particulars, due date, amount, days. Instead of interest, it is product. So this product is nothing but product payable, and this product is nothing but product receivable. Keep that in your mind. Online people, any difficulties? Hello?
No issues, sir.
Okay, now same question, people. Let's do it. Now this will go a little bit fast. First transaction on September 16, sold goods to Sham. Journal entry, please. Sold goods to Sham. Sham, 2 sales. So this is Sham's ledger. So 2 sales. So September 16, 2 sales. What is the due date? 1st October. What is the amount? 200. So from 1st October to the account current statement days, how many days? So October totally we have 31 days. In that 1 day gone. So balance is 30 days. Plus November 30 days plus December 31 days plus January 31 days plus February 1 days. Total 123 days. Total 123 days. Amount into days is product. Amount into days is equal to product. Now you don't do product here. What we'll do is that we'll use the calculator later. We'll do M plus function, MRC function into it. As of now, just fill amount and days, leave product. Product we will multiply using calculator using M plus MRC function. Please hold, don't write the product. We'll fill in the other details. October 1, cash received from Sham. Entry please. क्या डाउट है? कोई डाउट है? डाउट है? Okay. Sham to cash to Sham. Cash to Sham. So can I say buy cash? October 1 buy cash. Due date, guys, in case of cash receipt and payment, same as transaction date, October 1. Amount involved is 90. So October 1 to 1st Feb. Already we have calculated number of days, 123. We have already calculated 123. Please don't sit and recalculate every now and then. Product column, leave blank. I'll tell you what to do. Next, October 21, goods purchased from Sham. Entry, please. Guys, when I'm asking entry, all of you have to answer, because only when you keep on answering, your brain will proactively function, or else it will go in sleep mode. So, goods purchased from Sham. I want everybody to chorously answer. Hello. Entry, please. Very good. So, buy purchase or do purchase? Buy purchase. Due date? December 01. Amount? 500. From December 1, you have to calculate the number of days till account current date. Sir, December totally 31 days, sir. In that 1 day gone. So balance is 30 days of December plus 31 days of Jan plus 1 day of February. 62 days. That's all. Super. Next, paid to Sham. Paid to Sham. Sham account debit to? Cash. So November 1 to cash. Due date will be? Same as transaction date. Same as transaction date. What is the amount? 330. Number of days. Sir, November totally 30 days. From 30 days, if 1 day goes off, 29 days. Plus 31 days of December, plus 31 days of Jan, plus 1 of February. 92 days. Next, pay to Sham again. Sham account debit to cash. Very good. This is on December 1 now. Correct? 330 rupees. Sir, December totally 31 days. Minus 1 day. So 30 days of December, 31 days of Jan, 1 of Feb. 62 days. Online people, any difficulties?
No, sir. No, sir.
Now, December 5. Goods purchased from Sham, 500 rupees. Purchase to Sham. So, two purchase.
Buy purchase.
Buy purchase. See, people are thinking. So, two are buy answer. Hey. Buy purchase. Due date. December 5, sir. December 5, sir. Transaction date is due date for purchase, sir. Due date is given in question. Jan 1. Yes. How much amount? 500. So Jan 1, total 31 days. 31 minus 1 plus 1, total 31 days. Jan 1 to account current due date, total 31 days. Next, December 10, goods purchased from Sham. December 10.
Buy purchase.
Buy purchase. Due date, Jan 1. Amount 200. 31 days, same 31 days, because we just calculated the previous transaction. Now, Jan 1 paid to Sham. So again, please write 2020 properly. 2020. What is the date? Jan 1. 2 cash. How much? 600. What is the due date? Same as transaction date. Very good. Number of days? Same we calculate already, 31 days. Next is goods sold to Sham. Buy sales. Sham 2 sales. 2 sales. Very good. Due date? 1st Feb. Amount? 20. 0 days. Very good. Online people, any difficulty so far? Oh, all of you, please take your
No, sir.
calculators. Please take your calculators. Okay, now guys, one by one, all of you take your calculators. Let's do the M plus MRC function. So 200 into 123 M plus, how much? 24,600. Then 330 into 92 M plus 30360. Then 330 into 62 M plus 2460. Very good. Then 600 into 31 M plus. Now what will you do? MRC total, please. 94020 is there. No, don't write there. In the rough column, write 94020. In the rough column, please write 94020. Can I say this is a total coming on the debit side? So this is product receivable or payable? This is product payable. Debit side. Debit side was interest receivable or payable? This is the product receivable. So product receivable. Guys, here do one thing. I cannot trust you. Write product receivable here. Product receivable. Product payable. Okay. Now people, please multiply this. So here it is 90 into 123 M plus 1111, that is 11070. Okay. Then 500 into 62 M plus. Very good. 31,000. 500 into 31 M plus. Then 200 into 31 M plus. Then what am I supposed to do? MRC. So what is the total now? 63770 minus, it is on the credit side. So it is product. Who said receivable? Payable. Okay. So what is the end difference? 30,250. Product net receivable or payable? Net receivable or payable? Payable.
Receivable.
See, payable they're saying. Look at them. Look at them. Which is more? Receivable is more. You guys go to first hand, I'm telling you. Which is big, which is small, still you're not able to identify. Receivable is more. So what will be net amount? Receivable, no. So net product receivable. Now on the receivable, if you calculate interest, okay, first of all, receivable means who is supposed to receive amount? From whom? Nath Brothers has to receive from Sham. So we have to receive from Sham. To that extent, there's a delayed payment. So he has to pay interest. So we have to receive interest, correct? So for us, can I say on this, it is interest receivable? Yes or no? Okay. So now first step, what do? We fill in all the information. Second step is we have to balance. In the previous tabular column, we balance the interest. In this, we have to balance the product. So by balance product, because this product method, so I'll balance product. So what is the balance product we got? 30,250. 30,250. This one. Correct, no? All people, 30,250 is the balance of the product. So this is the second step. Now tell me guys, on this 3250, what am I supposed to calculate? Interest. So this is in months or days? It is in days. So what is the interest on drawing formula we agreed? Sir, product, that is total product into rate of interest by 100 into 1 by, if it is number of months, then 12. If it is number of days, then 365. Correct? No, this is the product method of interest on drawing. Same formula. Interest on drawing product method, what formula we applied? Same formula. Total product into rate of interest by 100 into 1 by 365. So what is total product? 30,250. What is rate of interest? 6 by 100 into 1 by 365. What is interest? 4.97. Interest is receivable or payable? Receivable. So what is the journal entry? Forget. Guys, I'm getting interest receivable to Sham as answer from offline people. What do you say, online people? Online people, you're not there. I'm telling you, I'm going. Bye.
Sham account debit to interest.
Sorry?
Sham account debit to interest.
Sham account debit to interest. Receivable or interest income. Hey, hello. Instead of interest receivable only, we debited Sham.
Interest income.
Interest receivable is asset. Interest receivable will remind us from whom we have to collect money. So instead of interest receivable, you have debited Sham. Name change. So credit will be not interest receivable. Credit is what? Income. Interest income. Interest receivable is asset. Interest income is gain. So instead of interest receivable, we recorded in the Sham's ledger. Correct? No, because interest receivable, if you record, interest receivable to interest, if you record, this interest portion will separately be hanging in the interest ledger, interest receivable ledger. So you have to go and refer two ledger. For the original sale value and purchase value, you have to go and refer the Sham ledger. For interest receivable and payable ledger, you have to go and refer the interest receivable and interest payable ledger. So if you have too many ledgers to refer, it will be confusion. So that is the reason, instead of interest payable and interest receivable ledger additionally to be created, we are recording that also in the Sham's account itself. So in Sham's account, I'll get to know what is the sale value, purchase value, interest receivable value, what is interest payable value. Everything comes in one place. I'll be to follow. So this credit is not interest in receivable. It is interest income, nominal account, credit all incomes and gains. So Sham account debit to interest income. So in Sham account, can I say two interest income? In Sham account, two interest income. So coming back to ledger. On Feb 1st, two interest, how much? In the amount column, 4.97. Any problem? So first thing, you prepared that tabular column, people, and you did the balancing first. See, I put the order, one bracket order. So first is balancing of product. Using that product, now you have to calculate what? Interest. So put that interest in the which column? Amount column. So now guys, this 200 plus 330 plus 330 plus 600 plus 20 plus 4.97 is the amount that we have to receive from Sham. So what is the total amount to be received? 1,484.97. From that minus the amount that we have to pay to Sham. So 1,484.97 minus 90 minus 500 minus 500 minus 200. Balance is 194.97. This is the balance amount that we have to. He is waiting for me to answer. He's like, I was about to say. Then he was seeing me. Hey. Balance is what? Interest receivable. So 194 closing balance is coming here. Carried on balance is coming here. Brought on balance is coming where? Debit side. So if debit side it comes means asset. Asset means receivable. This is the balance money receivable, not interest. This is the net amount receivable. So in both the methods, we got the same answer or different answer? Same answer. So whether you do interest method, whether you do product method, whether you do simple method, whether you do product method, ultimate answer is same. What is the difference? In simple method or interest method, the calculation is very tedious and very long. So it takes a lot of time. In product method, the same thing can be done in a short way. In starting, I said, when you recorded this transaction, I said you don't multiply 200 into 123. Why? Because later what we did? Instantly we did the M plus MRC function. So it saved time. Now against every transaction, if you keep on multiplying, it will be waste of time. So what will you do? 200 into 123, 24,600 equal to, you leave it. Then you'll do next transaction. Then again, finally, once you record everything, you'll come back and drop us what you'll do, retotaling. So waste of time. So don't do like that. Use the M plus MRC function in the calculator, which has been taught to you. So product will be finally total. Once you put all the transaction, then use the multiplication M plus function, then MRC. You'll get the total product, debit side. Same way for credit side. Find out whether it is net receivable or net payable. If credit side total is more, if credit side total is more, then the debit product. So it is product receivable or payable? Payable. So under the interest will be payable or receivable? Payable. So that interest will come where? This side. By interest expense it will come. If payable is more, it will be interest expenditure. Are you able to follow? So question can come anyhow. So don't deviate from your basics. Here we are only learning the structure and the format in today's session. Basic remains the same. If it is payable, then the interest expense will come here. By interest expense, the amount will come in the amount column. All in people, are you able to follow with me?
Yes, sir.
Yes, sir.
Akash, Disha, Kushal, Mokshita, Naman, Nandakishore, Srinidhi.
Yes, sir.
Yes, sir.
Do you find difficulty?
Yes, sir.
Any difficulty in this?
No, sir.
And
No, sir.
logic also is clear. Hello?
Yes, sir.
Initially, I explained, no? If you record extra interest, then for early payment minus that interest, all that also has been taught to you. So logic also clear, method also is clear.
Yes, sir.
Now let's go back to the examination, that sheet what we saw, no? Which all method was asked. If you go through this, which method has been majoritarily asked? Forward method. In that, majorly is product method. So very, very important. So we cannot skip. Now, just because they have only asked product method, it doesn't mean that interest method they'll not ask. Or the other methods, backward method, epoch method, they'll not ask. No. We have to study everything. This is only to give us an idea that which concept has got higher weightage. But that doesn't mean that the lower weightage wala concept will leave it. No. ICA is always like, judge me and I'll prove you wrong. So you will judge that in this attempt, this question will not come, and ICA will give you that same question only. That is our fate. So you have to study everything in go. Especially when our target is 100. People are laughing. Sir, CA foundation 100. Doable. If 95 is achievable, 100 is also achievable. Correct, no? Guys, last batch 95 achieved, no? People, when we were talking about 95, oh, 95 who will get in CA foundation, people are wondering. The first batch people, they were wondering, so forget 95. They were saying that 90 touching itself is impossible. Second batch people proved it wrong, no? Second batch 90 record. So when 90 record was said, I was talking about 100 or 95. People said that how 95 is very difficult. This is CA. This is not 11, 12 halwa. So 95 is impossible. Third batch also record set, no? 100 also has to be set. Who will set? Last batch said 95. So record, who will set 100? Huh? Fourth batch. Very good. Online people, yes or no?
Yes, sir.
Yes, sir.
Fantastic. Now,
Yes.
this ICA study model, which has been given to all of you, you have to go through the complete theory, people, because from theory, they can ask, guys, when I'm talking, nobody's talking. They'll ask theory from nook and corner. So all the theory points you have to go through. And if you find anything which is important, where there is an opportunity of framing question, please highlight that point. Concept is very, very important because anyhow the concept can be twisted and asked. So be very, very careful. True and false is the dangerous part. In between nook and corner, they'll ask you. That to a conceptual question. Practical question you can survive. True and false, they'll twist the question and ask you conceptually. So you have to explain. So explanation comes only when you know the concept. If you don't know the concept, you will not be in position to explain. True and false will carry 2 marks. One for true and false, another for explaining that. So you have to understand everything which is there in nook and corner. So entire theory you have to go through. You have to imagine where all the examiner can frame the questions. So in the book bag scanners, I've given you the true and false questions. Yes or no? In all the scanners that you've got, guys, the true and false which is there in your book back exercise of your ICA material that I've covered. Past exam papers, true and false is covered. Additional true and false also I've given to you. See here, this is ICA question, ICA true and false. This is PEP Jan 21 true and false. In addition to that, I've also given you additional true false. Behind every scanner chapter, there is additional true and false also that I've given you from different books. So if you study all that true and false, more than sufficient. MTP, RTP, ICA model, past exam paper, additional books, all true and false is covered. Okay, not okay. Online people, okay, not okay.
Sir,
Okay, let's mark the homework questions now. Homework nale or bhayam varudilla. Second question. Try it. Homework. Third question, leave it pending. Fourth question you can try. I think you might struggle, but no problem. Just give it a try. And where you are struggling, let me know. Fourth question is homework. Fifth question also homework. Homework. Of course, in that few questions I'll do it, which is very tricky and tough part, I'll do it. Second one I gave a homework. Seventh one. Pending. Eighth one pending. Ninth one pending. 10th one homework. 11th one homework. 12th one homework. 13th also homework. 14th homework. Sir, if everything we do, what will you do, sir? I'll do. Fifteen pending. Sixteenth homework. 16th homework. 17th homework. 17th homework. 18th one, no? 18th also homework. And I'm telling you, no, whichever you're not able to do, I'll do it. How much mercy you want? Hey, you have next class on Tuesday, man. You have full Saturday from evening. Sunday full you have. Monday full you have. Tuesday only morning class. '19 homework. Sai Sanjay says everything is doubt, sir. Leave it. You do it, sir. Okay, fine. Till this you can do. The reason why I'm asking you to do homework is because that format, how you should do the step-by-step procedure, you need to get used to it. Because when we come back on Tuesday, guys, you will face certain complicated questions. So if you are not used to the format, the step-by-step procedure, the complicated questions, you might have a big challenge. So that is the main reason why I've given so much of homework. So you have time till Tuesday. You can try to complete as much as possible, right? Honest students, is that okay? Hello?
Yes.
Yes, sir.
Yes, people. So that's all from my side for today's session. I'll see you all in the next class, which is Tuesday morning. Until then, bye-bye. See you. Take care.
Thank you,
Thank
sir.